Hello dear friends, welcome to Atlas eForex. Besides analyzing forex pairs in our website www.atlaseforex.com, we would like also to analyze other indexes which will help to understand where the markets stand and what is next. This time we selected to analyze the S&P 500 index, as always using eSignal Advanced Get Edition. As you can see on your screen, we are on the first day of February 2010, and we are looking at the weekly chart of the S&P 500, trying to understand how we arrived here and where are we going from now on. So let me try to guide you a little bit. March 20th, 2000, October 7, 2002, October 1st, 2007, that's almost 5 years, March 2nd, 2009, and more or less here is today. All right, let me show you those levels, the make or break levels as they are called. One, the second one, and this one. So you will understand from what date those three levels were possible to forecast them. For example, this one we could forecast it on October 1998. This one is the one that acted as a support level for the return of S&P towards up. I'll show you where it's coming from. It's coming probably from here, exactly. This was 17th March 2003. This one is coming from this low, which is August 2004. And this one, which acted as resistance for the upward move of S&P, is coming from June 2006. So what else do we know? We know that on October 2007 we started going down, and you can see it, and we stopped at about 668, 670 points of the S&P. The Fibonacci scale you see applied over here starts from March 2007 and counts the top of October 2007. Now you can see that the first drop with two lows, two bottoms if you want, was at the scale 1392. We had a rebound on 0618, usual. It happens most of the times. Then we came actually to 1618. The 200 moving average acted here as a resistance, and then we dropped all the way down to 425. We came up. The 50 moving average now was the resistance. We confirmed the mob and the Fibonacci level 3230, and then we moved up to 1982. At this point we are at the Fibonacci scale 2.320, and the question is, are we to continue dropping up to the 2618 level or to the 323 at 887 points of S&P? Well, we will see. Just wait a second. I'll bring you up more chart to see what is next. So let's continue from where we stand right now. Today, as we said, is the first day of February 2010, and I will apply a new tool included in the eSignal Advanced Get Edition, the ellipses. Let me open a little bit the chart so we can understand it much better. All right, here we go. We pick up the ellipses and we count from this top to this bottom where we could see any return. Now, let me take this off. Good. This is the short time ellipses, this is the medium time ellipses, and this is the long time ellipses. For details about how ellipses work, please refer to eSignal at the www.esignal.com, searching about the technical tools, and you will find all the literature about the ellipses. Anyway, the ellipses are moving vertically and horizontally following the prices. And actually they combine Fibonacci time and Fibonacci prices. So we can eventually trust them. As a matter of fact, we can see in front of our eyes how the long-term ellipses on the white circle did stop the upward move of S&P. Now let us see what would happen or where the ellipses are if we count from here till there. Now, these two ellipses, this is the yellow, this is the blue. The long time ellipsis is for the time being further down, it's coming. But we can see that at this stage, the ellipsis stands at the 3.23 Fibonacci at 887, which is a considerable drop if you consider that that S&P stopped at 1080 points until 887. That's a very considerable drop. We will see in the future. I will try to upload every day a video to follow up exactly how the ellipses will work into the forthcoming days. So, well, with a usual disclaimer, our analysis is not a suggestion for opening any position of any kind to any financial instrument. It is only for informative tools. Therefore, on that basis, we can predict that eventually the 2618 will be the next eventual level of support for the move of S&P. No make or break levels are available, therefore let us stay this way. Bye-bye for now. Thank you very much for following this video. We'll be seeing each other pretty soon. As I said, today is February 1st, 2010. Thank you. Bye-bye now.